Hi, today is December the 15th and this is an XPS Outlook. I'm sorry for the delay. I was just too busy lately and the markets have been kind of crazy, but let's take it with a pinch of salt because this is not the bearish market we would expect after a PPI at 9.6, CPI last week at 6.8. The Treasury market is heading downward, but it's still holding, and I monitor the 2-year, 10-year. As you can see here, it's drifting down, but it's still in the support area we've seen for a while. Something that I believe is absolutely essential to kind of detect or predict a sharper reversal would be what's going on FANG, or here FANG plus Tesla. I could add Microsoft to it. I could add Microsoft. I could make some other synthetic type of combo or mix. But let's say that on this front, if you look here, I mean, the correlation to SPX is very high. And even FANG without Tesla, the correlation is also pretty high. And if we look at the NASDAQ, I don't have the correlation here, but I calculate it separately. And there again, I invite you to join the Slack channel because the Rhino Slack has more regular update. It doesn't take as much work as recording these videos because I do have to do reports twice a day and I just copy paste part of it on the Rhino Slack. So let's go back to SPX, but again, take into consideration that we have to look at FANGs, we have to look at NASDAQ as a major driver. And in the background, maybe also the Treasury, the 2-year, 10-year, and of course the VIX. But VIX has, I wouldn't say been subdued, but it has not gone back to highs seen on the 6th or earlier this month. More generally, the market dropped to 4610. At that time it was maybe 4500, but you can see that there's not much fear concerning the FOMC coming tonight or this afternoon US time. So I would say here that we have the market taking a bit of a knock after PPI. It found support on 4610, which I had predicted pretty accurately. It's actually only a minor support. The major support is back on 4530, 3540. But I would say that we're more into a bullish congestion for now. We may object that, of course, this is not the right time to do some kind of SPX outlook. This is not exactly the best time to do an SPX outlook ahead of FOMC, but this is where I find the time, so this is what it is. So at this time, I would say ahead of FOMC, we'll have some bearish congestion, and if FOMC proves more hawkish, that has been priced in already, we may actually go back to this lower support, 45.80, maybe a little lower, and we will, in case of a shock, but I don't anticipate much of a shock, the market will go down here. I would suspect the market would probably go, even if it dips to here, I would go into a congestion. It would go into a congestion or some chaotic moves in this range. Again, for some reason, I don't see the market really dropping hard. So now let's look at the daily chart. Maybe that will give us a better outlook. Here we see a possible double top, of course, but again, I don't think it will be followed by a major fall again, unless FOMC proves really, really bad. So now let's look for today, at least until FOMC. The market is, again, like here, is looking like it's probably going into a bearish congestion. We could draw a trend line here and maybe a new channel. So I would say, unless the market really surprises us, the market will stay in this small and this tight range with a bearish bias for a while. Let's not ignore that we generally have more of a reaction the day after, so there may be a sharper move tomorrow. We've got that quadruple witching, major quarterly OPEX on Friday, so it's quite difficult to predict. But let's say that the bounce potentials are limited, the down potentials are also limited, and there's an overruling bearish bias at first. Okay, that is it for now. Again, please join the Rhino Slack if you're not there already. Of course, this kind of outlook can be interpreted in different ways according to your trading style, but I believe this kind of video is maybe even more important than the weekly recap on the trades themselves, because the trades themselves are my interpretation for all sorts of reasons, including money management, risk control for the fund I'm trading for. You may have either a different interpretation of the market or different objectives because your account is dealt with in a more personal way. Anyway, that is it for now. I wanted to keep it short. I will try and do an update after FOMC at the end of the week. Thank you for watching, and bye for now.